The last market report we did for January showed that the usual trends are still continuing. The newest of these trends is a stagnant median sales price that first appeared in December's report. In addition, our inventory continues to increase monthly and contract activity keeps declining. How much will the seller's market technically last? Is it feasible for the seller's market to have a comeback? Will the playing field continue to level between buyer and seller? Well, stay tuned for February's market report. Quick disclaimer. There are other agents doing market reports for Las Vegas. You might see different stats in the categories discussed in this video. Agents across Las Vegas have different sources and those sources might have different data. For transparency's sake, I will link all the sources I have used personally to create this video market report in the description below. First up is the median sales price. February clocked in at $420,000, which is the same as January. Year over year, the increase has been marked at just over $49,000. In January's market report, we saw that the median sales price continues to stagnate and seems like February will continue that trend. Will the sales price continue to stagnate or even fall in the next few months? Now we go to inventory in the Las Vegas Valley. February shows up at 9,876 units, an increase from 9,649 units in January. February of 2022 displayed 6,170 units being available, clocking in a gain of 3,706 more units for sale. The monthly inventory increases continue and the yearly difference gets even starker. We now cover pending transactions where a seller accepts a buyer offer and the transaction goes into escrow. February sits at 34,718 units being under contract, marking a decrease of 769 fewer units being under contract when compared to January. February of 2022 had 51,186 units under contract, which marks a decrease of 16,468 fewer buyers getting their offers accepted. We now go to pending to the final stage of an escrow, which is closed transactions. Simply put, these are the number of home transactions that finish escrow and transfer home ownership to the buyer. February clocks in at 35,555 units closing, marking a decrease of 1,248 units when compared to January. February of 2022 sat at 52,234 closed units, showing a decrease of 16,679 fewer units closing year over year. We now go to our final stat, which is median days on market. Or in other words, how long it takes from a listing to go live on the market to an accepted offer. February sits at 14 days on market, which is 2 days more than January. Annual gains show a decline where it took 8 median days to sell in February of 2022. While 14 days is not bad for the sale of a property, the days on market are accelerating in their length, which is indicative of how the seller's market is fading right now. Alright, I'm going to cover the pros and cons as it relates to buyer and seller, and then list the trends that people should keep an eye on in terms of market health. For any prospective sellers, here are the things you should take note of. Even though some trends sound like a repeat of other reports, there are nuances to be cited in the statistics. With that being said, the seller's market is still here, but its strength wavers with each passing month. The current strengths of this market is that inventory continues to be on the side of healthy demand and inventory still goes under contract at fair market value relatively quickly. If any prospective seller wants the best results possible, listing at fair market value will yield the shortest amount of time on market and the best chance at getting multiple offers. However, the weak points of this seller's market have grown in February. While inventory is still low relative to demand, monthly inventory is still increasing, with February posting an increase of just over 200 units. This gives buyers more options and reduces the overall traffic one listing will get on the market. While inventory steadily increases, contract activity continues to post declines. The combination of these two trends is adversely affecting the seller's market. Now let's go to our most recent trend where the median sales price continues to be the same. This was first seen in December's market report, and the biggest question going forward is whether they will continue to remain the same or if the sales price may even post a decline in equity, something that would be of great significance. When you combine inventory increases, the current decreases in contract activity, the buyer pool shrinking, and the stagnating of home prices, you get a considerable cooling of the seller's market. With the cooling of the seller's market, prospective sellers should expect less overall leverage when negotiating offer terms with qualified prospective buyers. Second, let's cover the pros and cons for prospective buyers. With the most recent inflation numbers, January showed an inflation percentage of 6.4%, which is the lowest percentage in recent memory. This has resulted in mortgage rates being lower across the board. Rates are fluctuating week by week where the possibility of better rates can be secured by a prospective home buyer. Better rates secured by buyers can be proven by the fact that contract activity decreases are getting smaller in scale. While inflation has fallen by 2.7%, inflation still remains elevated. One aspect that's concerning is that inflation only fell by 0.1% in January, making it seem like the immense progress we made in lowering inflation these past 7 months just stopped. Secondly, the Fed has voiced intentions to continue smaller rate hikes for their meetings in the near future, especially if rates remain elevated. This could result in mortgage rates and unemployment numbers being adversely affected, both of which can damage prospective buyer eligibility. Now, there are a few pieces of positive perspectives during this current market for buyers in the hunt. Inventory continues to increase steadily month to month, which means they have more options to look at. While the prospective buyer pool is decreasing, it does mean that those who are eligible to buy can compete with fewer other buyers and get more leverage in negotiations. Now, what are the trends and patterns we should all keep a close eye on? Continue to keep an eye on inflation figures as each month passes and observe the Federal Reserve's actions. The justification for the Fed's future rate hikes is that they want to continue lowering inflation and don't want to stop prematurely. This is especially important since inflation only fell by 0.1%, and the Federal Reserve can take that as evidence that they're not doing enough to tame inflation. As interest rates rise, the possibility exists where home buying affordability takes more damage, ending any hopes of better affordability. As fewer people become eligible to buy, the gap between supply and demand will shrink, cooling the seller's market even further. With future rate hikes, the employment market will sustain damage, which will also affect the number of eligible buyers going forward. Keeping a pulse on buyer affordability can be done when observing the declines in contract activity. While a decrease in contract activity is still bad news, we can look at whether the decreases are getting smaller or larger to see how current prospective buyers are faring in today's market conditions. The Federal Reserve begins its next meeting on March 21st, a week after the February inflation figures are posted. Well, that wraps up February's market report. If there are certain stats you want to know about or want to see a specific topic covered, please do let me know. If you're curious about your property value and want a well-formulated evaluation, have any questions related to buying, or just have any questions in general, please don't hesitate to reach out. If you have any feedback, that is also welcome as well. This is Oscar SanJuan of the Vegas Strong Real Estate Group, signing off.